The Chinese property giant Evergrande has been forced into liquidation by a Hong Kong court. Now, it was once considered that its failure could trigger a global financial crisis. It was that big. So why have stock markets taken its failure in their stride? Let's bring in Ross Greenwood now, our business editor. Ross, bearing in mind it's $500 billion was the total debt here. I mean, that's an eye-watering sum. The collapse of Evergrande has gone on for a long time.
It really has gone on for a long time, more than 2 years now, and really now this is the final solution to it. Had it really fallen into liquidation right in the early days, that could have triggered the sort of crisis because it owed money to many bondholders all around the world. And of course, them getting rights inside China is a very, very difficult thing. And even now, just what rights the liquidators appointed by the Hong Kong court will have is going to be really sort of questionable, trying to get inside China to get access to these assets. Now, we all know the images of those endless lines of apartment blocks in China that were built, seemingly for its population, but ultimately, in many cases, for what was a Ponzi scheme. And that is, they were being built to prop up the next block of apartments, all of them empty. And this was a fundamental problem inside the Chinese economy. But Lucy Chan, the judge presiding over this in the High Court in Hong Kong, basically came out yesterday and said this. It's time for the court to say enough is enough and put Evergrande into the liquidation, and therefore, as a result, will trigger a situation where many of the bondholders, big international investors, will end up with little or no money from their investment in this business.
Wow. So what about Australia, Ross? Our economy inextricably linked to the health of China. So how will it affect us?
Yeah, well, interestingly enough, the initial shock for financial markets happened 2 years ago. So if you look at financial markets now, even though Evergrande shares fell 21% just before this decision was made by the court, the rest of the markets were pretty calm, even here in Australia. But where you see it at the margin, remember, China's economy, its economic growth, 5.2%, in our terms seems strong, but it's very weak in Chinese terms. Its population is shrinking. So there are economic difficulties in China right now. Now, there's two ways it can go. The Chinese government stimulates the Chinese economy, which props up iron ore prices, coal prices, which helps Australia. Or they take the other approach, and that is they try austerity. And if that happens, then you see iron ore prices and key commodity prices fall, which is one reason why in particular you've seen in recent weeks the price of BHP shares, for example, under some pressure.
All right, Ross Greenwood, plenty of moving parts there, and he's all across it as usual. Thank you, Ross.